Has the US Federal Reserve finished cutting interest rates? Yesterday, the US Federal Reserve left interest rates at 4.5%. The questions that naturally arise are, is that it? And what happened to those expectations a year ago that interest rates would be at 3.5% by now? The US economy has proved to be far more resilient than expected. This time a year ago, recession fears were widespread, and many economists were concerned about the impact of interest rates having been hiked to their highest level for over 20 years. As it turned out, households and companies have actually benefited from higher interest rates, with cash-rich companies and wealthier households receiving interest payments from the government due to the high level of government debt. In addition, the decline in inflation appears to have stalled at just above the Federal Reserve's 2% target. The labour market is still tight, and significant fiscal deficits are likely under the Trump administration, so the Federal Reserve is understandably wary about concluding that the war on inflation has already been won. Appreciation that the US economy seems able to cope with higher interest rates and concerns about the potential inflationary consequences of Trump's policies have led investors to scale back their expectations for interest rate cuts this year. Only 0.5% of cuts are expected now. And some economists are even talking about the next move in interest rates being higher. Equities have taken this shift in market interest rate expectations in their stride, with investors perhaps concluding that earnings strength is a more important driver of returns, and despite question marks over US technology stocks' dominance. This is yet another reminder to expect the unexpected in the current cycle. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.